world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, FinTech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Stephane Malrait. Stephane is Managing Director and Global Head of Financial Markets, eCommerce at ING. In that role, he effectively leads ING's electronic trading business as market maker and on behalf of clients. Stephane also sits on the Innovation Council of ING Bank and the Innovation Steering Committee of ING London. Today's chat was an interesting one, looking at FinTech for capital markets and where the opportunities lie. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you like today's show, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Stephane Malrait. Stephane, welcome to Rebank.
Thank you.
What's your role at ING?
So I have two roles at ING. I arrived 2.5 years ago. My primary role was to run the e-commerce activity, which is the electronic trading with our corporate and institutional client on electronic trading venues. But soon after that, my second role, who gained more and more importance, is to look at innovation and innovation for the financial market business, so the trading floor activity, if you want, in terms of partnership with fintech companies or creating our own innovation within the bank.
Interesting. Okay, so that second part is basically it's fintech and innovation as relates to capital markets and the work you do with customers there.
Yes, one way to think about it is the first part is the existing electronic change that we do within the bank. So it's between now and 18 months, 2 years' time. And the innovation is more what are we going to do from 2 years to 5 years.
Mm-hmm. This is really interesting, actually, because so much of fintech and innovation as relates to banking is focused on effectively taking advantage of deficiencies that arise from the fact that a lot of core banking technology was built in the 1960s and
Exactly.
70s. But if you're talking about electronic trading with customers, presumably that's stuff that was coming into being in the 2000s.
Yes, so it started in the 2000, but if you think about it, it's evolved at different speed based on the different type of instrument you want to trade electronically. So the equity market wants electronic very fast, and now you trade within microsecond, and it's all about low latency, full electronification, access to different exchanges, etc. Then you had the FX market, who also started in the same range, but the FX market is probably now 80% electronic, but still what we call RFQ different. So there is a manual intervention in the electronic type of transactions that you do between the client and the bank. And then you have the fixed income products, the corporate bonds or government bonds, who are less electronic, and we're still in transition to that. So out of those three different worlds, you see that the protocols are different, the trading venue are different, and the acceleration of the fintech is still happening. So there's still a lot of transformation to be done in that world.
Mm-hmm. No, that makes sense. I guess the rate at which different asset classes kind of went full electronic is probably a function of market liquidity and effectively efficiency in the markets, things like equity and FX initially, yes. But stuff presumably now trading syndicated loans or high yield distressed assets, it's as much finding out who actually owns that, negotiating over price, exactly. And then working that transaction over a longer period of time, which isn't so easy to automate.
Yes and no. So in fact, you can see two use cases, and that's where innovation comes. That the very liquid product who trade in high volume landed themselves well in electronic trading world, and that's why they develop fast. But the more complex products, where there is less transaction, complex negotiation, etc., didn't start to be electronified in the past. But now with blockchain technologies, this is where we realize maybe that's where it could help to remove a lot of manual tasks, paper-based activity using blockchain technology. So those two worlds are starting to get closer to each other in a way.
Yeah, no, it's interesting, and this is all very reminiscent of, at least on the equities front, and then applying some of this new fintech and innovation to it. The Michael Lewis's Flash Boys, you read that book, and IEX, what those guys did setting up that electronic exchange, and I think I will probably take to my grave the story of the guys building their own underground internet connectivity between Chicago and New York, so they could beat what was commercially available by fractions of seconds as algorithmic trading was kind of booming. I don't know. Maybe we can get back into that later on. But are there any specific projects that you're looking at the moment? And obviously commercial sensitivities, but are there specific areas within that space that you view as potentially ripe for innovation?
We try to look at different way to innovate. So specific projects, the big themes are machine learning, artificial intelligence, blockchain. All those will impact our world, and knowing what can we learn about it, how do we become more expert about it and do experiments. So it's not that it's secret, but we try to do a lot of experiments, and what we did at ING is to develop our own methodology to run initiatives, if you want, or partner with FinTech to do pilot programs where we try to assess the big unknown and see if we can discover something and try to fail fast and recover fast. So our internal methodology is called PACE, and it's based on three things. It's a lean startup methodology, design thinking, and agile way of working. And so we combine those three and try to do fast iteration. So in 1 year, we probably start, just if I look at the wholesale bank activity, we probably look at 15 to 20 different initiatives, and we try to learn from them. And the one who stick, we continue to work with them. The one who fail, we let them go, and we start a new one. So we saw some interesting stuff in blockchain, where probably 2-3 years ago we started our blockchain initiative just to learn what blockchain was about, put a few developers to learn about the technology and try to polish that. But now we are much closer to go to live environment and to work with other banks or clients to develop those type of solutions.
So on blockchain specifically, and let's try not to make this a blockchain conversation, one of the, well, at least as relates to capital markets and trading, the kind of the ideal use cases that people seem to be thinking about at the moment involve closed groups of counterparties. So it would be ING facing off with ABN AMRO, Rabobank, SocGen, other banks throughout London, Europe, and potentially small group throughout the world. That requires coordination across organizations, and you've got people like R3 and a handful of others looking to provide infrastructure and standards to do that. I mean, what's your sense based on the work you guys have done and what you're observing as to how that's likely to develop? So
it's very interesting, because in a way you can say it's difficult to make it happen. For, like, I think in R3 there is now 70 members. So how do you organize 70 members to work together? But this is where my experience as electronic business has helped as well, and others do the same. Because it's not the first time we do that. If you think about clearing system, if you think about some of the trading platform in FX was created by a group of banks. So like EBS, who was the biggest interdealer platform at the time, was created by a group of banks. FXall, which is the FX trading platform for corporate and institutional clients, was created by a group of banks. So we continue to do that, and we learn from our mistakes as well. So what we do in R3, for example, is since it's very hard to launch one initiative with 70 players, we come up with one idea, we pitch it to the groups, and out of this group, probably 5-6 people come together to say, okay, yes, we are interested to work on this domain, and we are ready to put some resources at it. And so we start as a subgroup and do some experiments, and then we can go back to the larger group, say, this is what we learn, and grow from that. So that's one good way to make it work. It's not always easy for sure, but I think it's compared to 5-10 years ago, banks were competitors, so it was quite hard to open up and work together. Now I think we are all trying to chase the same thing, and partnering with each other is a very powerful thing, and much easier to do that in the past.
One of the things you mentioned before was some work that you guys are doing around machine learning, and potentially that's machine learning applied to automated trading,
Yes.
algorithmic trading. I'd be fascinated to understand kind of developments in that space. I mean, machine learning plus what were even previously very effective systems must be really powerful.
Yes, so in that space, what was interesting for ING is that we started, the bank started in the retail space some time ago. So we have a very large retail client base, and they put up a group of data scientists to work on that a few years ago on the retail side, and we learned from that and create a similar team on the wholesale bank side to explore and to launch some initiatives. The big difference in between the retail world and the investment banks world is that probably we have a lot less clients, but we have a lot more data in terms of trade activity, etc. So quite quickly what we found is the complexity is also about the data. How do we normalize the data? How do we gather the data? Where do we take it from? And that's the first challenge that we faced. And we're still continue to learn on that and try to find as many sources of data that we can use. And then it was more finding the resources, the good data scientists who have the right mindset, the right skill sets, and can deliver some solutions. And so that was a second step as well. And we have a very, very good team now and there. And then was to try to find the experiment. Where should we, as you say, should we be able to go after the electronic trading world or after the world? And it's true that in the past, as you said, we started electronic trading probably 15 years ago or 17 years ago in the year 2000, and we did electronic pricing, and we did, but it was not machine learning type of stuff. It was more algorithm, software development algorithm to price electronically our product based on what we know. So it's a very different way to approach it, and we are trying to do that at present and work with traders to explore that new dimension in a way. And that's what is start to be interesting, because you match people who don't have a strong financial background but have a very strong data science background with traders who have the opposite, and try to make them work together to see how you can develop something where you can serve your clients better with prediction of a better price, etc. So I don't think it's finished. For us, it started probably a year and a half ago. We made great progress, but we are still on the journey to go there.
Mm-hmm. And so is that aimed more at ING as a market maker, or is it aimed more at executing trades on behalf of clients?
So it's a good question. For the moment, the experiment we do is ING as a market maker.
Mm-hmm. Mm-hmm.
Yes.
And so it's around, I don't know, what's the best time of day to put through a block trade? What's the best way to split up blocks to make it more likely to execute? Is the price likely to go up or down in the next X number of hours? What's the output?
Yeah, no, the output, it's more because of the price you want to do. In a competitive environment, in electronic trading, the client has the opportunity to ask as many banks as they want for a price for the liquid or illiquid instruments on electronic venues. And so for some instruments, it's quite hard to predict what is the best price I should give to my client at this moment in time. And in the past, what we tried to do with algorithmic trading is we looked at what was traded before, we looked at the type of client activities, but we didn't try too much to predict. So this is what is new in that world, right? If you go too cheap, so it's attractive for the clients, but as a bank you will lose money, right? You will not be able to hedge yourself, and if you go too expensive, the client will find a cheaper offer somewhere else and will use the trade. So you have to find that right balance, that it's a win-win between your clients because it's a good price, and it's a win for the bank because it's something we can monetize.
So some concerns have been raised, alarm bells sounded over the past decade plus now, I think, as trading processes have gone more electronic, more automated. We've seen some very unfortunate and pretty crazy market swings, flash crashes, and the like as a result of more automation, higher frequency stuff, and less human involvement. Yeah. As we move toward a world which leverages more machine learning, leverages potentially even more sophisticated data analytics and algorithms, how do you think about the balance between kind of market stability and market efficiency versus
so first, let's make clear our view is not, we don't think the machine will replace the human in that sense. So it's more a tool for us to help to decide a better price. It's a tool for us to give a better service to our clients, etc. We still think the client relationship is very key. We still think the roles of the trader is very key. The analogy I can say is like the airplane industry, right? So a plane can take off or land by itself, but you still have a pilot and a co-pilot in the plane. And for us, it's the same view. Even if we can automate everything, we still need to have a pilot and a co-pilot to make sure the price that we give to our clients. The other point, which is very important in a way, is since a lot of the financial crisis and the crashes, the regulators played a very important role to change the regulation, to ask the bank to have a lot stronger controls into the way they do electronic trading and how they run their activities. So this protects us in a way that now we have very strict guidelines, very strict policies, even policies on the machine learning type of algorithms. How do we ensure and test and monitor that activity, and we do it well. We try to make sure we stand to our regulatory obligation for that.
Because banks are key participants, but at the same time you've got investment funds who are in some cases doing larger volumes and certainly aren't subject to the same regulations that banks are, and could potentially impact the way that these markets operate.
So it depends per product as well, but I think the regulators are not done, right? So they started with the banks because there is a clear impact to the industry there, but they will expand to other market participants, and they try to do everything they can to expand. In FX, which is one with probably the less regulated, the banks work with the central banks to develop the code of conduct for FX business, and this is for all market participants in the FX industry, and people will have to adhere and sign to this code of conduct, and that way you could try to mitigate the abuse of some of the practices and try to stop trading with those practices. And we see already, and there is some market participants who are being cut to trade with banks or to trade on electronic venue because they don't play a fair game.
I guess that makes sense. Similar to the way that tighter anti-money laundering and KYC obligations on banks flow through to other players in the market who need to transact via banks. I suppose if exactly. you are implementing these obligations on banks, then there is potentially some flow through. Taking a step back and thinking about the broader fintech landscape, what are you most excited about at the moment?
I think it's two things. It's one, the enormous creativity that we see coming out of the fintech industry. So people are not afraid to start crazy ideas, are not afraid to experiment, and they are not afraid to talk to people about it and to show what they've done, etc. So we created a lot new world that people before were not open to. And the second thing was probably more on the investment bank side than the retail activities. A lot of fintech needs to work with the bank to make it happen. So in a way, it helps the banks to be more agile. It helps the bank to implement new solutions and cheaper, faster, better. So they are not disruptive as much that they are on the retail activity of banking.
Has the I'm actually really curious about this. Have you found any changes, any evolution over maybe the past 3 years of kind of the internal view, the internal feeling within ING of what fintech is, whether it's a real thing, whether it's going to impact the way that banks work, how seriously people should be taking things?
Yeah, so I will go back to let's go 10 years ago, maybe, to start with, what is a fintech? A fintech is a small startup company with highly skilled people and some cool technology. But way back then, a bank will not take the risk to say, should we start to work with this small player who can go bust in 6 months? It's a highly risky thing, so it was better to work with very large technology group to say you've been there for 50 years, you are going to stay there for 50 years, and so we sign a big 5-year contract with you. The world had changed dramatically since then, and in fact now, because they come with this cool new technology, we look at them and say, wow, it's something we should try to see if we can use it, if we can reduce our costs, if we can increase our profit, if we can help us to be better or serve our clients better, etc. So at ING, we put a workflow in place because the big challenge that the fintech company face working with large banks is this onboarding issue. How can this small company work with a much larger entity and be onboarded to it? So we have a fast track process to say, if you are classified as a fintech company, and we want to do a pilot with you, we probably do it with just a few weeks to get all the onboarding, all the legal review, all the KYC, and we can start the pilot. This is the first interaction with them. We tried, we welcome them to our offices, and we try to put data to their system and see how it works. Then when we can validate that the solution meets our requirement or what we want to do, then we'll go to more production onboarding and negotiate a larger contract and work with them. But we don't have this fear anymore that the company will not succeed, because we validate that what they do, and we will help them to succeed because we will be one of the key drivers to help them grow because we bring that contract to them. So it's a very different way of working that we had 10 years ago.
You work out of the London office at ING, right? And obviously, large Dutch bank. You guys have a presence in London. I would imagine it's a subset of your overall operations, i.e., the retail customer base is in the Netherlands, and presumably a lot of the corporate customers are in the Netherlands. If you're talking about a fintech pilot or potentially working with a fintech company to do something better or different at ING, is that something that can be driven out of the London office? Is it something that goes through the Dutch headquarters?
So it's a mix, and it depends of the company. For that, I think ING is viewed, and I think it's true, is a very innovative type of bank. And the way we see it is because we started innovation at ING probably 17, 18 years ago when we created the first online bank. Pure online bank in Canada. And since then, we have created a lot of online bank in different countries. So it's true we have our two main core activity in Belgium and Holland, where we have a very large bank in both countries. But then we have pure online bank in France, in Germany, in Spain, in Australia, in a lot of different countries in the world. So this creates this mindset of innovation, challenging ourselves and creativity. Then what we do with those fintech is we created incubator or labs. So the first one was in Holland, in Amsterdam, in our head office, where we invite fintech and we work with them to develop them. Then we create another one based in Brussels. We call it the FinTech Village, where we also welcome some fintech and we work with them. And since you are right, London is also an important hub for us. It's not a hub for the retail activity, but it's a hub for the wholesale bank activity, where we do a lot of our trading activity in financial market, where we do a lot of our lending activities, structured finance activities, etc. So what we created in London as well is to say, how can we also make sure that we focus on some of those fintech companies who are London-based, we have access to them, and we would like to do pilot with them. So we started this year, in fact, to do what we call a pilot center in London, and where we focus this year mainly on RegTech. And the difference we did with Amsterdam and Brussels is we do those pilots with other banks. So because RegTech is not a competitive space, and we want to validate a new company who can help solve the regulatory issue, we work with another bank to say, are you interested to pilot that with us? And if it works, but they gain 2 clients or 3 clients instead of 1, and this is very powerful, and I think work very well for us here because there is such a big pool of talent in London that we can tap into, and we meet with them almost every day. So I met with one this morning for breakfast, and very cool ideas and technologies, and we can try to use them with other banks to see if we can solve a problem for us.
I should introduce you to some people.
Yeah,
someone immediately comes to mind. No, interesting. Okay, so you've been at ING for, would you say, 2.5 years?
2.5 years, yeah.
And before you, I think, worked at other large banks. How do you find ING? You mentioned it's kind of viewed as an innovative bank. Now, is that a mandate from the top? Does senior leadership in Amsterdam, get this agenda? Do they progress it, or is it a lot of kind of innovation directors internally trying to kind of constantly push.
Yeah, I think it's what of the success from that. It really come from the CEO who really want to push in the change of the bank and the original culture of the bank. He's quite vocal to say, ING could almost see being as a large fintech with a bank license, because we really try to disrupt ourselves, we really try to innovate, we really try to. So this culture is part of the DNA of the bank. And I think this helps a lot, because when it comes from the top, it can cascade down to different levels within the organization. And you try to challenge yourself, you try to think outside the box, you try to meet people outside, say, what can they bring to my... And it's true that I don't see that with a lot of my peers at other banks. Maybe it's because it's part of the culture, or maybe because of this ING Direct experience that ING had for many years, or maybe it's because it come from the top of the bank as well, or a mix of those 3.
Yeah. No, well, presumably, it's a combination, right? I mean, it's got to be like culture at middle management and below, mixed with a strong message coming from the top that says this is a priority and we have to be pushing this? Because if you don't have both, then it's not going to happen.
Yes, and I think all the banks, to be honest, they have to look at that, and they are starting to look at that, because something, as you said in the beginning, the cost of the infrastructure that we run is enormous, and a lot of the legacy system has been there for 20, 30 years. Very expensive to run, high on maintenance, a lot of people doing the support. So we have to dramatically change that. And to do that with a big change, you need to look at sides. You need to look at smaller companies who have very different views, very lean, and we can change that. And you do it component by component. And it's more the app store of the banking industry. How can you replace to be 10 times faster, 10 times better, 10 times cheaper, not 20% faster.
Yeah. Well, that's a great way to look at it. Wish all banks did. Before we wrap up, I'd love to ask you maybe a few quick practical questions that some of our FinTech listeners might be able to benefit from. You guys have surely been approached by dozens, if not hundreds, of fintechs. You've run some pilots. Presumably, you've integrated a small number of those successful pilot companies into long-term partnerships. What can fintechs, broadly speaking, do better? Like what are some of the obvious mistakes that they make that kind of trip them up from?
Yes, in a way that's what's very interesting, because by this experience of working with fintech company for a few years now, we learn a lot about what works and what doesn't work, and this is great, because in a way we can help them to succeed as well. So first we look at proposal they're trying to solve. What problems they are trying to solve? Is this problem aligned with the problem we are trying to solve ourselves? Very important. But we don't stop there. Then we look at the team itself. Does the team have the right structure, the right mindset, the right experience, the right skills? And some do and some don't. They have a good idea, but it's clear that they don't understand that space, or they didn't do enough research. So the team is very crucial. And then it's the technology, right? Can the technology is it more than just a PowerPoint? Can the technology they bring is really better than what's out there? So we looked at those three things, and we are very open with them. When we meet them, we try to give very open feedback to say, we think you are a great idea, but you are still very mature. Your technology is not there. You cannot tell us it's a great technology because you didn't even start to develop. How do we know you are going to have a cool technology if you didn't start your development? So we look at that, and yes, we look at a lot of different companies, but we look at them with passion. We look at them to really try to make something happen, right? So it's not an exercise to say, today I made my 10 fintech. Really try to look to say, can I work with one of the? If not, I'm wasting my time. Yeah. So that's the thing.
But I mean, there must be some stuff around, when it actually comes to starting to work together, i.e., either they don't appreciate how long the sales cycle is, they don't have enough cash to see themselves through to revenue generation. They don't understand the
this is a main mistake, but it's probably the reality as well, right? You have to be a bit crazy to create a fintech company. So your business plan is, I want to be profitable within 3 years, and most of the time it takes 6 years before they have their first product rollout, right? But if they had a business case with showing to their investor it's going to take 6 years to get my first clients, probably nobody will invest in them. So that's that dilemma, right? How do you continue the high level of energy to show to the world, your investor and your clients, that you have a good solution that you want, and be realistic as well, that it always takes more time than what you plan for.
Yeah. And I would imagine some of it too is just appreciating the culture of the bank that you're looking to partner with. I mean, fine, like you can show up to another fintech and say, here's our API documentation, plug it in and you're ready to go. you can't really walk up to an ING and do the same thing. I mean, you have to expect that there's a lot of face time involved. There's a lot of time on the ground. There's a lot of meeting with the right people. Probably some repetitive meetings from time to time. We all know how corporate hierarchies work, but lobbying internally, making sure that you're in touch with the right people, doing the necessary things to get broad buy-in.
And for that, we learned that we cannot just be a lab where we invite fintech and we let them work. We have to integrate them with the specialists within our bank very quickly, so they see how we do things, and the specialists also see how it could apply to his business. So most of the initiative, I will say, 80-90% of the initiative we do with fintech are with a sponsor, which is from a line of business, who is probably going to be the client of this fintech at the end. And this sponsor is involved from the beginning all the way to the implementation. And this gave us so much value in terms of feedback, in terms of making sure they understand what we want, we understand what they can deliver to us. It's an enormous opportunity. Why I didn't say 100%, the cool new technology which is going to be applicable in the next 5 years is probably less relevant for the trader who trade today, right? So when we started blockchain 3 years ago, there was not a lot of trader who wanted to learn about blockchain. Now, there are a lot of people who are starting to talk about it and say, how can it help me in my day-to-day business, right? So sometimes we have to take a leap of faith to say, we think it's important, so we start the initiative, even if we don't have a strong support from the daily activity. But a lot of the other time, we try to look for the sponsor, the expert in the field, who is going to work with the fintech to make sure what they do is successful for us.
Where does the P&L impact lie when it comes to early stages of exploring a fintech partnership through to it actually being live?
It depends of what we call the horizon of the fintech. So if they solve a problem for today's activity, the investment and P&L result will be owned by the business line. If it's something with more medium term, like AI, blockchain type of stuff, we finance them at the wholesale bank level by the innovation board. So we have some money available for that because we cannot see the benefits right away. So we have to do a bit of innovation to do that. If it's something even more disruptive than that, what we call the new way of banking, different new type of revenue, this is managed by the investment fund at group level. So we have innovation at group level. We'll look at after that new emerging type of industry leads, and we finance them that way. What we say internally is, the money should not be the issue. The issue is trying to find the right company and to make it work.
Well, I think that's 100% right, but so many banks struggle with that.
Yes.
Stephane, what's the best way for people to find out more about your work and connect with you directly?
Easy. I'm quite active on LinkedIn, so they can find myself on LinkedIn and on Twitter as well at @Malrait.
Great. Stephane Malrait, thank you very much for joining us today.
Thank you for inviting me.
Thanks so much to everyone who tuned in for today's episode. It was a great pleasure to connect with Stephane and get his views on fintech for capital markets and where things are going. We run a newsletter at bankingthefuture.com where we push out information from time to time, articles that we write, some of the podcast episodes, and some highlights around, distribution, partnership, stuff like that. We're working on some really interesting stuff over the next few months. It'd be great to connect a bit more deeply with the community. We love the comments that we get on the site. At the bottom of each episode page, there's a comment feature. And we really appreciate the people that respond to the newsletter, give us ideas, tell us how we're doing, what they like about the podcast, what they think we can improve on. We love connecting with listeners, and we'd love to hear more from you. Get in touch, will.beeson@bankingthefuture.com. DM us on any of the social media platforms. Tell us what you think of the show. If there's stuff you like, tell us. We'll do more of it. If there's stuff you don't like or stuff you think we could do better, let us know. Thanks again for tuning in. Catch you next week. Thanks for tuning in to Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.